Welcome to a new podcast episode from the Fireside Chat series, a highlight of the Deal Forum at the prestigious New York Athletic Club in the heart of New York City. We are making our Fireside Chats available to those who couldn't be with us in person and for those who would like to experience and listen to it again. Hello there, M&A Advisor community. This is Roger Aguinaldo, and welcome back to the M&A Advisor podcast. Since 1998, the M&A Advisor's mission is to recognize achievements, provide thought leadership, and connect professionals in mergers and acquisitions for the purpose of improving your deal-making craft and accelerating your deal flow. We are so glad you're joining us for this insightful and inspiring podcast conversation curated for mergers and acquisitions professionals. Whether you're an aspiring deal maker, a seasoned professional, or just curious about the world of mergers and acquisitions, you'll find something valuable and relevant in our podcast. Our goal is to bring you the best insights, stories, and tips from the experts who've been there and done that, so you can learn from their successes and mistakes and take your deal-making skills to the next level. But before we dive into today's episode, we have a small favor to ask you. If you enjoy listening to our podcast and find it useful, please consider following us on Spotify, Apple Podcasts, and YouTube, and subscribing to our M&A Alerts newsletter. You can find the links in the description below. This will help us reach more people like you and grow our community of M&A professionals. It will also let us know that you appreciate our work and want us to keep producing more quality content for you. Plus, you'll never miss an episode, and you'll always be in the loop with the latest trends in the M&A world to improve and accelerate your deal making. So please follow us. You are the reason we do what we do, and we couldn't do it without you. And now for today's podcast.
So happy to be leading this next conversation. The speaker that I'm speaking with here is Mr. Bob Goldsmith. He is the founder and president at Northern Edge Advisors. We are going to be discussing mastering deal flow in 2024, insights on seller mindsets, market trends, and how we're helping prepare for the future. So I'll just give a little bit of background on Bob, and then we can jump into our questions. So Bob founded the predecessor to Northern Edge in 2006, developing its unique advisory model, building a talented team of experienced professionals, and establishing offices across North America. Northern Edge focuses on seller advisory services across various sectors, with Bob at the helm, bringing 30 years of business ownership and management experience. He is a sought-after speaker on the important issues facing private business owners and has been published in several business publications. Thank you so much for joining me, Bob.
Thank you.
So, Bob, we've heard from many of your peers and experts already in M&A this morning. What is your unique perspective on current economics and M&A?
Okay. Thank you. Though not without its challenges, the U.S. economy is doing relatively well, and I think the business community is now quite comfortable with how things are going. A little bit of the history is, if you recall, the CPI increased by 9% in June 2022, and I think it really shocked everyone and put a lot of fear in us. But then by September of this year, 2024, CPI increase was only 2.4%. And that change gave the Federal Reserve confidence to start lowering interest rates. So they lowered them by 50 basis points in September and then another 25 basis points in November. And though this was still significantly higher than pre-pandemic levels, lower interest rates and a more balanced labor market and really good corporate profits really changed the dynamic. So I think it brought a lot of optimism into the market. And so to bring it to the M&A market, easing of headwinds in the macro environment created tailwinds for the M&A market. And so between Q2 and Q3 of this year, deal volume increased by 19%. And in the third quarter of this year was 30% higher than it was a year prior. So those are really terrific numbers. In fact, I think it's 3,075 or so transactions completed this year. And if you looked at a bar chart, you would see versus, I'm sure most of you have actually, if you look at it versus previous quarters, it's really remarkably healthy the way the deal market has come back. And with private equity and other acquirers having expectations of further interest rate reductions in 25 and 26, people have come back to the market. And so we're seeing things like private equity at better valuations unloading portfolio companies. And there was a lot of pent up demand to do that. We're also seeing other acquirers come into the market and do deals. So and even as I survey business owners around the country, there's just more confidence in the market. And when there's more confidence about interest rates and inflation and the business environment, that's sort of the secret sauce for us all to get deals done. I'm also seeing more advisory agreements getting signed, more business owners who are, I think, in this market sort of, again, thinking about, not that they ever really stopped, but I think there's more optimism about going to market.
So your firm obviously focuses a lot on data, analyzing the market, providing insights for sellers. You mentioned some of the deal flow data already in the sellers market or in M&A. Any other data that you want to share with us in deal flow for sellers and your insights from this year thus far?
Yeah, I can give insights, but I'll say, I think for me and I think many other boutique investment banks, a lot of our information is ultimately anecdotal information about our own experience. So I think that's what I would share. So our experience has been, one win for what we consider the good guys. Last week, we closed on a $462 million transaction, a company based in Houston and India. It's a electrical transformer business that was sold to Standex, public company, cross-border transaction. That's great for the firm. We had a very healthy number of businesses in the 25 to 100 million range. So that's been positive. We actually don't keep very meticulous track of this, but I was working with our analysts and it seems that the number of calls that we make to convert into meetings with buyers that are on our research list has increased about 20%. And so, yeah, a good number. We're selling a company out west right now that's had, 16 meetings, 8 in person. The investment banker's doing a lot of flying around, 6 bids. And there's been real elevation in the pricing, between buyers, but also for individual buyers that, under competition are increasing prices. And I think, again, anecdotal, but I think that what I was seeing when things really slowed down is more price compression. And I have the sense that some of the acquirers, particularly strategic, have more wiggle room in how they price businesses. So that's been very positive. I've also seen an uptick in the number of business owners now that are really seriously contemplating going to market. The conversations were always occurring and there were always people that were going to market. I don't think that never stopped. It slowed down a little bit, but I think there's just more confidence right now in going to market. And, an example is I've signed up several companies over the past 4 months that I've known for 7 or 8 years. We've been speaking, they've been building their business. I've been formally given guidance on sort of stretching out multiples, the things that an investment banker will do. And it's just a cluster of businesses that have said my head is in the right place, and the business is in the right place, and the market is in the right place. And so, I'm going to go to market now.
Do you find that increased activity is sector agnostic or is there areas that you've seen favorable?
For the investment bankers here, I think that we see a lot of our clients, it's not the particular sector. Hot sectors get going and sectors that are, and when it's slower in a sector, they're less apt to do it. But I've seen activity across the board. We were selling a bunch of, logistics companies 2 years ago. That sector slowed down. Sectors that I think logistics is going to come back now because supply chain efficiencies. There's a lot of work to do there. I'm very hopeful for that sector. But then other obvious sectors that are showing strength would be technology, AI. I think there's just a speaker on AI, it sounded like. Cybersecurity, cloud computing. I think we like healthcare. Senior care is going to be, because of demographics, is going to be, and aging is going to be an important area. Manufacturing, particularly automation and robotics, efficiencies. The American consumer continues to be strong. So that's a strong area. Professional services, we're selling businesses in that area.
So, in terms of some of those themes, like with aging or healthcare, things that may be affected by new political environment, we were talking about that in terms of your expectations going forward to 2025. What are some of those potential policy changes or just environmental changes that could affect your expectations for next year?
Yeah, so like a word of wisdom would be that I think we can all relate to is don't overweight the macro. We don't know what's going to happen. The only certainty is uncertainty. But in speaking to business owners around the country and also some of my peer group here, the sense is that there's quite a bit of optimism because lower interest rates, less inflation, businesses are performing well, and very clearly there's going to be, we think, a more pro-business environment. There's going to be less regulations, less antitrust. So I think there's lots of anticipation for a positive environment. And then lots of business owners are just talking about some relief around the 2017 tax cuts. And we don't know what form that will take, but I think pretty clearly we're not going to have something radically different than that.
Yeah. And likely to cause a pretty quick jump start in 2025 as well.
Yeah, my expectation for 2025 is that it's going to eternally an optimist, unless there's some real disruption. I mean, that it's going to be a really very positive year and 26.
And as you work with clients to make sure they're prepared for these various market scenarios, what could go wrong? What are some of the biggest things that you want your sellers and clients to look out for that could be a challenge?
Yeah, I mean, basically everything I said that is good could go wrong. Right. That's the reality of the situation. And that's why you don't overweight the macro, because the reality is that we could have a geopolitical issue. You don't apply tariffs to countries and they don't respond. We have a tendency to think that we sort of, have these moves and they just exist out on their own. There will be retaliation. There will be responses. That could go wrong. We have this debt that we just kick the can down the road on. So there could be inflation could pick up and it could prompt a recession. In that regard, I think the smart moves that all of us that went through the great financial crisis and everybody here went through the pandemic, I think they're smart management moves that we want to advise our clients on. I mean, number one, it's a cliche, but always be prepared for when windows open and also for windows close and for when things change. Really good cash management, like the rule is for financial advisory firms too, when things are good, be careful. So they should conserve cash. They should hope for the best, but prepare for the worst. And I think this is really easy for an investment banker to say, pretty tough for business owners to do, but anything having to do with operational flexibility, I think the businesses that are going to be successful in the next period there's a reason why you have really great management teams. And that's because when things are very difficult, they can make smart decisions. As I tell business owners, when private equity groups are scrutinizing them, for instance, why it's so important just to have really high quality people, but operational flexibility, being able to scale up and scale down. I've had so many conversations with business owners who are talking about, where they're sourcing secondary options if China closes. I'm sure many people here have as well. Do we go to India? Are we going to go to Vietnam? Can we move things to Mexico? Reshoring, are we going to move it here? Those are extremely complicated decisions. And we're advising business owners to really map out strategies. These are to current clients, have a plan because you're still running your business. But we speak to lots of clients in the years before they sell and try to advise them on how private equity or buyers would look at their business. And this is some of the guidance, really being able to be nimble in a changing environment.
So how do you prepare? How do you work with your clients in a holistic approach? We were talking about this earlier, taking a holistic approach for seller readiness. How do you prepare them for these different variables?
Yeah, so we're just spending a lot of time with owners. I mean, there are different categories of businesses that we work with. There's the category of owner who walks in and says, I want to sell my company. And so that's one category. And then we do all the work that people here do to prepare them to do that and to transact. We're increasingly speaking with business owners in the years before they sell. I mean, it's good business practice for us, but we think that we can be helpful in guiding them and making the right moves as they go forward. What is the eventual outcome that they would like to achieve? What is the timetable? I mean, talking to them about generational issues and the things that people here are aware of that we can help them with, the quality of their presentation of financial materials, if there are concentration issues, the quality of the management team, the dependency on the owner. We're spending a lot of time talking about those issues, but also what success would be for them. What outcome do they want? Is a private equity a better option, or do they want to have a full sale? Do they want to remain on for upside? And then finally, I've found that we're just acting more as a trusted advisor than ever before. One of the things that we're really proud of at Northern Edge is that we have these really close relationships with our former clients, which to us is sort of the sign of having done things right. Of course, it's good for business. But my business partner always says, it's not at the closing dinner, to the extent we still have physical closing dinners. It's not their happiness at the closing dinner. It's 5 years on where you find out if you did a good job. But we're really close to a lot of business owners 5 years on. We've become more of a trusted advisor. And I'm finding that they are coming to us for services that we can provide or advice that we can provide informally. And then also for guidance on things that we're not the right people, but we may have the right idea. So we're helping them find more interim and fractional CFOs, interim and fractional CMOs. I've placed several people in peer advisory groups, right? These CEO groups that are around. They love it. I was with a group in Cleveland last week where they're really getting guidance from their peer group in the years before they sell, which is valuable to us because as we know, there's a certain amount of courage to transact, to make that step. And so I feel these peer groups are really helpful to them, but we're also helping them with, finding wealth managers, finding family psychologists when they're generational issues. So we've become I think a real trusted advisor for a period longer than the transactional period.
So we have talked a lot about how you prepare seller clients for future transactions and market changes. Just a quick question to add on to that. If you were to give a recommendation on how many years they would start working with your team to plan for a future transaction in their business, how many years would you suggest they should start talking to you guys? And then we'll do a few Q&A from the audience if there's any questions.
Yeah, so we would start, we would like to start, 18 months before a transaction, 2 years, but even informally, I mean, we can speak to them longer than that. I mean, I'm always telling business owners, one of the hidden secrets about investment banks is that we'll give free advice if we have an expectation that we're eventually going to help you in the transaction. But I think 2 years is good. I speak to lots of groups well before that, understanding how a buyer will view your business. I mean, God, private equity people should visit with people that are just starting, that are in their phase of initial success in their business. Why not plan for the eventual outcome?
Absolutely. Thank you so much, Bob. Appreciate your conversation.
Thanks so much. Thank you, everyone.
We hope you enjoyed this episode and learned something new from it. If you have any questions or comments for us or any of our guests, please feel free to leave them in the podcast platform of your choice or send us an email at editor@maadvisor.com. We would love to hear from you and get your feedback. And if you haven't done so already, please follow us on Spotify, Apple Podcasts, YouTube, and subscribe to our M&A Alerts newsletter at the links in the description or on our website at www.maadvisor.com. This will help you stay updated on the latest M&A interviews and trends and support our podcast to grow and reach more listeners like you. This is Roger Aguinaldo, the creator and founder of the M&A Advisor. Thank you for tuning in and being part of our M&A Advisor community. Until next time, stay safe and happy dealing.